Welcome to the Legally Ever After Real Estate Podcast, where we help you build, protect, and pass on your assets. I'm your host, estate planning attorney Pamela Moss-Garrett. Let's get started. Today we have Lance Somerville. He is a commercial broker with over 22 years of experience, and he's going to be just sharing with us commercial real estate investing tips and best practices. Welcome, Lance.
Hey, thank you so much for having me. Really appreciate it.
Thanks for being here. So kind of getting started, when you are working with someone who is getting into the commercial investing space, we were chatting for a moment before we hit record, and you kind of shared that really you like to talk about what is their investing style. Can you share a little bit more about what that means and how investors can really use that?
Yeah, absolutely. So, just kind of chit-chatting a little bit before we got started, we're talking about investing style being passive versus active. Those are kind of really good starting points, right? So, as an investor, myself, I know what lane I belong in, and I know where I like to be, on one side of that coin versus the other. And so I think that's one of the first things that I like to ask people is, are they active or are they passive? And then we can peel back into the layers of in what sector. So because commercial lends itself to so many different types of investing or different sectors, right? Whether it's multifamily, hospitality, industrial, industrial flex, office, retail, those are kind of different layers as well. So the first thing is starting out and just finding out, okay, are you managing this? Is there a return on investment that you're seeking? What kind of hold periods are you looking at? And so that's a really good starting point. And then we really can dive into a lot more questions from there. So I think first is just getting a handle on, are they active versus passive? And it's okay to be, I guess, an active investor, knowing that, hey, I'm going to buy this, and then Lance is going to help me, or Mary Sue, or whoever it is going to then help me find a qualified property manager that I can stick this with. And then that's, of course, part of that, even though they're active because they're local and they're not big, that becomes sort of an active passive depending on that approach.
You mentioned there that like certain industries are more active and more passive just by the type, like the nature of the type of business. And can you give some more examples of, is industrial more active versus passive? What you meant by all that?
Yeah, so a lot of it is starting, really ground level is, let's just discuss, are you managing your own property? So there are some clients that I have that work in a specific, location, and they say, what, I kind of want to control as much as I can within my proxy. So if it's up and down this block and maybe it's, 10 minutes in each direction, I know that I can acquire some property. I might have to do some capital, expenditure improvements or capital improvements to it to get it ready for rent. But I'm an experienced property owner. I have a team of handymen that can make the repairs, or I can make my own repairs. Maybe I'm a contractor, whatever it might be. And so I want to be able to kind of control some of these things down here, and I'm going to manage it myself. So that would be a real true blue example of someone who is an active investor in my mind. And I have clients like that are like, hey, I don't need a property manager. I already have a good legal team for, my leases. I already have a good team that I can call for any renovations that I need to make. And I'm actually going to do that case by case anyways. So I'm going to go out and see if I can attract the tenant that I want. And then depending on that tenant is where I'll maybe make some of those improvements, or that tenant is making improvements and I'm giving them some allowances or some capital back for their tenant improvements, their TI work. So there's kind of a different way, to approach it there from a real active level. And then the rest would be, then it's getting into, and that could be any asset type, really, whatever somebody's comfortable with. So I wouldn't say that it's any specific asset. There are some that you can hit cruise control on a lot better, right? So some of those you would be fishing for maybe a 10-year lease on that property, and it's a triple net lease. So I acquire the property, I look at my acquisition costs, I look at my down payment, and I know, okay, how much I need to lease this property out for if I want to make 6%, cap rate on it, capitalization rate. And to do that, then I need to know where that market is for rent. But once I do some initial improvements and I have that tenant in place, I might have that tenant for 10 years. And then because they're on a triple net lease, they're really responsible themselves for all the maintenance, the taxes, the insurance. And now I'm literally just holding the asset and they're paying it off, and I'm yielding a cash flow. And in that circumstance, not everybody wants to have a property manager. So there's some people that are pretty active in it. So not really assets specific, just kind of more what's that approach and what's their threshold.
That's great. You mentioned holding periods. Can you talk a little bit more about that?
Yeah. So, holding period is going to be different depending on someone's strategy. So, switching gears to like maybe even a passive investment. There's some passive investments that are only going to be 2 to 7 year holding periods. A lot of times they could be illiquid. So if you're doing some commercial investing and maybe you're doing private equity or syndicated investments, which are, fantastic investments, or can be if you have the right operators, then those can often be something that will cash out after maybe a 3-year period or a 5-year period. And so those are going to be very specific to that operator and how you're stepping into that as a buyer into a property. So for example, the most recent property I bought into is in Michigan. It's a 7% yield annually with preference. So, we do have a good, we've secured our position where we're going to get paid every year. And in the cycle of that business, it's a maximum 5-year hold. If they decide that they want to cash out investors early, then they have that option. And those can yield anywhere, with this operator very specifically, anywhere between 14 and 30% IRR. So we could see a 2x return on our capital in that, 5-year time frame or earlier.
That's amazing. So, for people listening who maybe are doing more residential real estate investing right now, and they're interested in commercial investing. You've touched a little bit on, one way to get involved in commercial investing is through syndication or through some type of partnership with other investors. Is that kind of a good path for someone trying to get into commercial real estate investing? Or, is it still, should they consider kind of investing themselves and finding their own property? What's kind of the advice that you would give to beginner commercial real estate investors?
So in today's current market, if I was maybe investing in a triplex or a quad, for example, right, that residential piece, which great opportunities, right? There's still good properties out there. There's some things that I would be looking at is maybe I'm house hacking. I don't know if you're familiar with house hackers, right? Mm-hmm. Okay. So, and for the audience, if they don't know what a house hack is, maybe I find a fourplex or a quad and I say, okay, cool. I'm going to go get a loan on it. I'm not going to break the bank, so I don't have to put a ton of money down because I'm going to live in one of the units. And then I'm going to rent out the other 3 and I'm going to cash flow those. And I'm going to bring the property up over time. And then I'm going to eventually lily pad into something else, right? So I'm going to secure the asset for as little out of pocket as I possibly can. If you're having great success with that, and maybe maybe you're on your 3rd or 4th property, but you're like, gosh, I really want to level up. And I would just go really step by step. I wouldn't try and swing for the fences unless you found a good group that you could align yourself with. If you are aligned with, people that have good integrity, a proven track record, then you're not swinging in front of the fences and you're not doing it all by yourself. So you're not tying up a ton of your capital that you've made out of some of these house hacking, projects. That's kind of I just think it's wise to, if you're going from a triplex to a quad, then maybe you're doing a sixplex or 10 units, right? And you're just keeping it in a level that you're comfortable with because you've done it a few times and you're familiar, or maybe you've done it once. And going from 4 to 10 units, the financial is going to be different in terms of now you went from a residential product to a commercial product, but the management and the approach is going to be very similar. And so that's not going to be a huge leaps and bounds. So I would kind of stair step it and go slow so that you're not tying up all of your capital into large commercial projects. And I'm just using multifamily as an example because a lot of people start in 3 or 4 unit type projects and then they kind of graduate from there. But if I was in this market today, whether I was looking at commercial or that residential, and I'm just talking about loan type, okay, and what drives that is 5 or more units is commercial, 4 or less is residential. I would be looking for who's a property owner who has an assumable mortgage in today's marketplace, because the assumable mortgage is going to allow me to step into a better interest rate. So my numbers are going to work a lot better based on some of those purchase prices that people are trying to drive. And a little known fact is you can get with your title company. If you have a title partner and you're an investor, or you're an investor and you're working with a broker, you can certainly get with the broker and say, hey, can you get a list of property owners by loan type? Right. So, so like for you, Pamela, I know you do a lot of networking with different investment groups and different investors. And as you have people that are buying those, triplex and quads, if they're not chasing property owners by loan types right now, then they really should consider it, because there's a lot of people that are in place on a very aggressive assumable loan that's going to blow the doors off of today's interest rates.
Oh, wow. That's a really good point there. When it comes to time frame, I mean, people who are moving into commercial investing, what is the time frame that they're going to deal with from a commercial purchase or investment versus, previously investing in residential?
Time frame, like I got to peel that back for a minute because my mind goes a couple different places. So
we can do all the places you go to, but what I was thinking about was, obviously if you're buying an investment property that's a residential property, those move pretty quickly, and the timing involved with it, from looking to closing to all of that, is rather quick. Whereas in the commercial space, it's a lot different. So when are you typically recommending people meet with a broker, and what time frame should they be expecting?
So, it's funny because there's 2 sides to it. So that as a buyer agent, you want to make sure that you're giving people as much runway as possible with all the due diligence. So you want to be able to, if it's a commercial loan, it's going to require an environmental. At minimum, it's going to require an environmental, sort of pre-check on it. And by that, I mean very much, is there anything that is of concern with respect to contaminants? Not really talking lead-based paint or any of that kind of stuff that you see on the red side, but more so just that it's commercial financing and they want to make sure that it's all good. So you've got turn times on environmental. That's going to take, realistically in today's market, 4 to 6 weeks. Then you have appraisal. Commercial appraisals can go anywhere from 4 to 8 weeks, depending on that lending institution that you're working with, how soon they ordered it right out of it being under contract, getting the accepted contract. So a lot of banks will wait 1 to 2 weeks. They'll need to collect kind of a non-refundable or a refundable deposit from that borrower. And they're doing that in the first 2 weeks. So you already burn up like 2 weeks just waiting on the bank to get their ducks in a row. And then that appraiser's like, wow, I'm 6 weeks out. You're like, sweet, this is taking 2 months for something that should just have gotten ordered right out of the gate. I would say realistically anywhere from 60 to 75 days would be comfortable as an escrow timeframe. From, hey, found the contract or found the property, we've tied it up, and that's that's what we want to submit. On the sell side, on the listing side, they're going to push that as fast as possible. There's so many people are like, hey, this should take 30 days. You're like, timeout. Timeout. Like, how is this going to take 30 days? So you've got to be able to temper it, try and manage expectations, move quickly, but methodically. And, you don't want to go to the well so many times, as I call it. Like, I don't want to write a contract for 30 days and then have to come back and ask for an extension, then have to come back and ask for, because then they're going to start asking for non-refundable money down, right? On a commercial deal, they're going to start saying, hey, you're burning our time. So you're going to burn some of your money, because if you're really sure about this and you really like it, you're not going to mind parting with, several $1,000s. I'm in that exact scenario now where I'm on the listing side. We gave them ample time. Their money went hard on the first extension, and now they asked for a second extension. I get it. It's a little bit of a nuanced property, but at this point, we asked for, $3,000 non-refundable, and we did not tie it back to the purchase price this time. So you're like, hey, you're burning our time. It's going to cost you money. So you want to try and get those dates shored up as much as possible. And you want to try and build rapport with the listing agent as much as possible, as well as that bank. I want to know, who's your banker, Mr. or Mrs. Buyer? Like, who are we interfacing with? I don't want to talk to them on the day that I submit the offer. I want to try and just get out in front of them and just introduce myself and manage expectations on what's their process and what can I expect from them, because that's going to help me, move things down the line. And so depending on the property, this is where it will get asset specific, but I would say by and large, for me representing a buyer, I'm really trying to get, 60 to 75 days of time for escrow period. So that's inspections. They're going to have to turn in all their financials. That's the appraisal, that's the whole 9 yards. So
one of the things that I noticed in, starting the process with you, and you're so hopeful and great. I'm interested in kind of owner occupied. And do you have any tips for someone who is maybe in a similar situation, an owner occupied purchase, meaning, they're currently in a lease right now and they want to own a property that they're going to lease to their own business and maybe bring on some other tenants, maybe not, maybe just get a smaller space. But for someone, is that a good idea to do? And do you have any tips for people kind of in that market?
Yeah, I look at it all the time, and I always think, man, if you have the capital, so a lot of times it's just they don't have that down payment, right? Or they don't have the required amount of money that they're going to need to come up with for working with the bank to acquire a property. But if they have anywhere from 10 to 25%, then they're in the game, right? And now if that's all they have, then no, then you're not ready. But I look at leasing, and the landlords win every single time, right? Because they want to put you on a 3 or 5 year lease term, and your lease comes due. They're not really interested in resetting the financial clock, right? They don't want to go back in time and be like, well, we started at 18 a foot, triple net. Let's just go back to 18 a foot, right? That's not how that works. So they want to keep ratcheting you up. And so before you know it, you're spending all this money on lease, space. It's like, man, what could you do if you just had a little bit of cash up front and bought your own space. Now you can control your own overhead. I just think it's a much better, if you know you're going to be in business for 10, 15, 20 years, because if you're like me, I'm still looking for my rich parents. And so, it's going to be a minute, right? So for me, it's like, why would I want to lease if I can own, because I'll control my own overhead. And then my exposure really just becomes my utility, my capital, improvements that I need to make over time, and my taxes and insurance. So it's really not favorable to be in a tenant situation in my mind, based on all the leases that I've conducted and what I see out in the marketplace. Go find a condo that's got an affordable owners association, or find a standalone building that's not going to break the bank, and make the improvements over time. Or decide like, hey, do I want multiple tenants? Because if I'm going to own and occupy it, then I really need to, typically I need to own and occupy like 51% of it. And then those tenants can have that 49%. That's usually a lot of like what the banks are looking for. And maybe that 49% of it's just based on this square footage ratios. And if that's the case, that person or those tenants might be then paying, for your note on the property. So why not look at that, as an option?
One of the things
Go ahead.
that I came across, that I don't know everyone who are maybe people who are newer into the commercial investing space, finding listings isn't the easiest, right? Like, it's not like going on realtor.com where you can just type in and find available listings. What are the options for someone who is looking for deals commercially, either for themselves, for to be owner occupied, or they're looking at other deals to invest in? Where are they finding them? They're not, some of them are online, but some of them aren't.
Some of them aren't, or it depends on the database. So, LoopNet is owned by CoStar. They own, apartments.com, they own land.com, they own all these things. And what they turn out to the consuming public isn't everything. So there's multiple databases that people can utilize, but just know that, as for whatever reason, the residential, you can see everything, right? I mean, it's all out there. Commercial, not the case. And so, if you were to be like, hey, Lance, it's time, I want to start looking for my place. Great. Well, you might see 7 of 16 properties that are out there, or, you might see 3 of 8, whatever it might be. And so the rotation is there's algorithms that they use, and it's all money driven. So that, sorry for the background. It's all money driven for the advertising, the way the marketing works for the commercial. And then also co-brokering in commercial is a whole different ball of wax, whereas that's kind of par for the course in residential. And so sometimes brokers won't even release it to the public for a while. So it just depends. And so what I would recommend is kind of take a multi-pronged approach. Definitely always search online, look into other investment groups. And then if you have a broker that you've built rapport with and you like their approach, I put my clients on drips. Essentially, it's an alert. The systems alert me, and then I circle back with my clients, once a week or once a month, depending on that cadence that's necessary. And then I just say, hey, here's the new stuff that just came up. Let me know if any of these look good to you based on what we've been talking about. So I would take you got to be really proactive, or go get, if hey, this is the asset type and this is the location, go pay a list company. And, or like I said, go and, go get a list of assumable loan types and, market that way off market. It's a little more legwork, but goodness, you just need one property every 6 months to do well, or whatever it might be. So
that's really interesting. And I think that was something that was surprising to me, kind of starting this process, was just like how the communication, you're a really good communicator and you find things and you reach out, but the other side, there might be listings and the commercial broker in the residential world, brokers get back to you like instantly. And the commercial, it's much slower and it's a much different pace.
It's a slower burn. Deals are slower. The communication can be really slow. And all I can think of is that there's a skewed ratio too of professionals, right? So I consciously left residential because I just, having done it long enough, I was like, right. So I got in the commercial world, and one of the gaps that exists very, very much so is that there's not an overwhelming amount of professionals. And then there's not a lot of great commercial brokers in terms of communication styles or being really proactive. So it's funny I could talk for a couple hours on that, but that's just me. So yeah, find someone that you jam with, and find someone that you respect and has that communication style that you like. I personally, try and be high touch and get, when people are ready and when they're not. So you don't want to bother people when they're not ready, but when they are, yeah, you better be good at communicating.
Are there any common mistakes that you've come across when it comes to commercial real estate investing that you kind of want to warn people about?
When you purchase a property and you get your first tax bill and they're trying to increase it, protest it. You need to protest it, because if you're just letting the assessor's office, year over year reevaluate your property tax, and you haven't protested it, and not even once, at least go be a squeaky wheel. That's a huge common mistake. People wonder all of a sudden, how do my property tax bill go from X to this in such a short amount of time? Well, it's like, well, did you ever protest it? So, I would look at being proactive in terms of protesting that tax bill, just to keep checks and balances with the assessor's office.
That's a great tip.
Yeah, so that's a common mistake. And then I think that, a listing broker has their assumptions on a property. And by assumptions, I mean, we have to look at all these different terms, right? So there's always like an interest rate. There's always, what are the operating expenses? What's the vacancy or credit loss, for a property, that kind of thing. So don't assume that they're giving you accurate information. You have to audit that in a due diligence period under contract. And so, be smart about, does your contract have you asked for the estoppel certificates? Have you asked for a list of capital expenditures? Did you ask for permits that have been pulled in the last 2 years? Were there any insurance claims that were made? Really kind of dial it in and be as persnickety as possible on those details, so that you're not overlooking anything, right? That's a common mistake, is that people assume that they're getting, information because it came from a listing broker. It's like, well, time out. Did you ask how they arrived at these numbers? Did you ask what the assumptions were? Because there is a huge difference in pro forma and actuals, right? So an actual is, even that I would, not accept as gospel. I would, peel back in a due diligence period. So you have to be proactive, and just don't make any assumptions that they've given you numbers that are 100% real. I hate to say that, but there's a lot of great pro formas out there, and pro formas are amazing. That's one of the best part about a pro forma is an agent's best friend, because I can just make it up if I don't know the answer, right? I can just go and say, well, I put in 2% for vacancy, whereas the bank on that asset might be looking to use 5%. So there can be differences there.
That's super helpful. When people are kind of shopping around for or looking for a good broker like yourself, what are some things they should have in mind when they're meeting with a commercial broker to make sure it's a good fit?
Okay, so if they're a commercial broker, do they have any kind of a portfolio that they can speak of? What kind of tenure do they have in the industry? Are they, what kind of designations do they maybe hold, or certifications? So these are all really good things that you can ask. I can talk about the fact that I'm a CCIM candidate as part of my resume, but because I haven't finished all my courses, I'm not a designee, so I can't publicly advertise that. But if somebody asks me, then yeah, then what that CCIM shows is that I'm taking my career very serious, and I am pursuing education to the nth degree so that I can properly represent people. So those are kind of things that I think are important. And then it wouldn't be a bad idea to know, like, are they like any other human, right? Are they in coaching, or do they have a mentor? What if they don't know the answer to something? Who do they go to, for further information? So I think just peeling back some of those layers are perfectly fine questions to ask, and just getting a real grip on who they are and how do they approach things. Are they giving to any kind of charitable contribution when they're done with the sale? I mean, those are kind of cool things. And then having a better idea of, like, what's their work-life balance? Because I tell you what, and this is how I figure out who I can negotiate with, right? If that's an agent and they're not doing a lot of business, and maybe their spouse isn't working, or maybe he doesn't have like a big contributing job, and you kind of find these things out by asking different questions about them as a person. Well, that agent might, they say they're working for the seller, for example, or they say they work for the buyer, but if they need money, they're working with me. They're not working against me. So be careful about who you're doing business with and how hungry are they, because there's a big difference there, right? So if are they paycheck to paycheck? That's my point, right? And those are harder questions to ask, but you can finesse those questions, and it's important because you don't want them overhyping a property that really isn't a good fit, or maybe it's too much, but they just need to get that paycheck. So now you do see less of that in commercial, but rest assured, it's out there in every sales landscape. So, salespeople are really good at being salespeople. So
that's super helpful to know, Lance. And I think one of the things that I've appreciated about working with you is, there's a lot of people who just kind of dabble in commercial and they don't have the expertise. And really, after just like 5 minutes of talking with you one-on-one about the situation, you learn, like, I can tell the difference when I'm talking with someone who's brand new to it versus you. Or someone who's kind of just trying to fake it, that they know what they're talking about. And I think that the kind of knowing the pitfalls is just like the years of experience that you have. I mean, this is commercial property. It's a big investment. And having someone that really has that experience and knows the pitfalls and isn't just trying to kind of, like you said, sell you something that might not be in your best interest is super helpful. Are you seeing any trends right now in Colorado right now? You mentioned a few kind of things kind of intertwined, but is there any other trends for kind of coming into 2023 that people in the commercial space should be aware of?
Right now, I think similar to residential, there's a little bit of that shock and awe going because of all the, rate hikes. So we definitely had deals that investors pulled out of, which I get it. If you have, if you have 150 basis points or more inside of, 1.5 months or 2 months, that changes the financials, that changes all the numbers, right? And so now what I'm seeing is, it seems like a lot of stuff is overpriced, according to people's threshold for returns. And so I think we're going to see just some of that shake out, and the people that don't need to sell, they'll continue to hold firm. But I think what we're seeing for trends is that we're probably establishing a baseline for certain product types. Right now, there are lots of large office spaces in certain districts that are just still empty. And that's very challenging for a lot of people. So we'll see what happens there. So, distribution, supply chain distribution, manufacturing, light industrial, all that is very strong. We're not seeing a lot of that coming out of ground either. So you kind of need to know, if you're investing in a product, what's coming out of ground in the future. And so if you're gonna, maybe you're not getting the best return out of that first year or two, but hey, this is something I'm going to hold for 10 or 15 years. And that we're not seeing a lot of new construction in that sector, then maybe it is worthwhile, because you'll see better returns as as your holding matures. So trends right now, I would say, not seeing a lot of new construction for light industrial or any of that manufacturing, like I mentioned. And so that's really tight in certain areas, depending on the product type. Outdoor storage, if I had places to take people, I could lease that or sell that all day, but it's really tight in terms of what's available for outdoor storage. So I would say know what the zoning is, depending on what you're trying to invest in, and know what the city will allow, and then look at maybe reports on what's coming out of ground, and then you can make better educated decisions. So I don't know if I would give any major trends, other than I think Colorado is still doing very well in terms of the bounce back from anything 2020. And I think we're going to see another rate hike in at least February and probably March. And those could be another, 50 or 25 basis points, or maybe we'll see 25 basis points and then another 25 basis points. And then we'll probably see kind of a holding pattern from the Fed. And so I think this time next year, if we're going to see any of those rates break loose, it'll be this time next year. But I think it's just going to be, bunker down and get used to what it is. So look for alternatives. Trends right now, you know what? I've got a good trend. Here's what I'm seeing. There's a lot more people open to seller financing in commercial, because right now it's a very viable option, and it's a way for them to still yield additional capital off of a sales price. Does that make sense?
Yeah, absolutely. Well, the final question I ask everyone, Lance, is what is your legacy? What is the legacy you are building?
So outside of trying to be a good husband and father in no particular order. So those are the two legacies that I work on daily, and, just giving lots of love at the house. I would say that from an investing perspective, just teaching my daughters about cash flow and different ways, and how you can start small. You can be if you don't want to go own a property here in Denver, and you're a non-accredited investor based on the SEC's, rules and regulations, you can still find projects out there to go drop 25 grand into and 30 grand into, and you can start building that over time. And if you do it, and then that can start to steamroll, and eventually some of those will then, and as your income can go up and maybe you become an accredited investor, then you can make other investments and just little by little. And so I want to teach my daughters about cash flow, and I just understanding that you don't have to start with a whole lot. You don't even have to start with a single property. You can be legitimately, like I just mentioned, part of a group, and you can be a non-accredited investor, and you can take some of that capital, find the investment group through Pamela, and place that capital, and keep growing little by little.
I love that. Lance, what is the best way for people to reach out to you if they're interested in your services?
So you can always hit me on email or phone or text. And so my phone number is 303-968-7047. And my email address is lance@mycosearch.com. So it's short for Lance at mycoloradosearch.com.
Perfect. And I'll include all that in the show notes. Thank you so much for joining us today, Lance.
Hey, thank you. I just want to say, I'm honored to be on here, Pamela. And if somebody needs an amazing trust attorney, family attorney, then Pamela is your go-to. So we couldn't be more pleased with all the work that you did for us. I just want to say thank you.
Oh, thanks so much, Lance. I appreciate that.
If you need an updated will, trust, or estate plan, and you are a Colorado resident, we would love to be your estate planning law firm. Give us a call at 720-706-0036 to schedule your complimentary 15-minute call. You can also directly schedule at lawmother.com/go. If you liked this episode and you want to learn more, you should definitely check out my international best-selling book, Legally Ever After. It's available on Amazon as both an ebook, a paperback, and an audio version. And if you'd like a free chapter, head over to lawmother.com/LEA.